And right now, Musk still says that Jensen
things.
makes the best chips. He's not. It doesn't seem like it's very begrudging.
Yep.
You say like, yeah, Jensen's good.
Jensen was quoted as saying, as far as I know, there's only one person in the world who could do that, and that being putting together in 122 days this Colossus. That's what they actually call it, the supercomputer that's housed there.
One of the more interesting dichotomies within tech is the software versus chips debate. How do you want to be positioned? And the chips look like a mess right now. First of all, the ratio of Nvidia to SMH is at an all-time high. So as great as Nvidia continues to act, the rest of the group is fading hard.
Jim Cramer discusses Nvidia's upcoming earnings, highlighting concerns about smaller revenue beats due to challenges like lower yields from current generation chip. Despite this, Nvidia remains critical in AI development, with significant demand for its H100 GPUs, especially from Elon Musk's AI ventures and rapid data center expansion. He points out Nvidia's outperformance compared to other semiconductor stocks, as the broader sector struggles. However, Cramer warns investors about Nvidia's history of sharp corrections, even after strong results, urging caution given its high valuation. Lastly, he notes mixed investor strategies, with some trimming Nvidia holdings due to tax concerns while the stock continues to thrive. Cramer emphasizes Nvidia's dominant role in AI but advises managing expectations in a challenging semiconductor environment.
What about Deutsche Bank's point yesterday that Nvidia, next week, may not beat as much on revenue as they normally do? Average beat on revenue last 5 quarters, $2 billion.
I think that could be true. You're still dealing with the idea of a yield on Blackwell, their current generation. Yield being, not all of them are done. You might make, for every 1,000, maybe you have to throw away like 400. So the gross margin is not going to be what people want. I don't think there are going to be as many watch parties as there are for Saquon Barkley.
Whoa.
My understanding is this will be closed as soon as early next week, and they're going to just keep buying those H100s. He's, again, in only the way Musk can, and the Information did a very interesting story on this a few days ago. I mean, what they've done in Memphis in as short a time as possible to build this data center and to network all of these H100s is nothing short of, many say, somewhat miraculous, so much faster than any other company can build a data center.
It also may be one of the reasons why I know that I'm not looking for a big upside surprise in NVIDIA, but the H100 is not the current. That's not the most current
no,
GPU.
Blackwell is, but
what's great, H100 then H200 Blackwell. Here's what's interesting.
Maybe if you've already started with H100s, you got to, I don't know.
Okay, so what Jensen would tell you, Jensen Wong, this CEO, is that they're all cumulative because they use software, and it's not like a 46 and then you want to turn it back as a Pentium. You do the H100, it works well with the H200. They don't depreciate.
Right.
And Jensen mentions the greatness of working with Musk on this self-driving.
5 straight quarters of triple-digit earnings growth is the reason why Amy and myself and many people have clients with really big embedded tax liabilities here. It's a really tough thing. We utilize custom indexing so that we can algorithmically tax loss harvest against some of that position. But to Amy's point, the stock just continues to strengthen. They gave guidance for this quarter they're about to report, Judge. They said $32.5 billion. So the prior consensus was $31.7 billion on data center revenue. From my perspective, if they can do the $32.5 billion plus on data center revenue and not disappoint on raised guidance that they themselves just gave the last time they reported, I think you're okay in the stock. But I want to remind people, this stock, even with good news, has had a history of really short, really sharp drawdowns that can shake people. And as recently as this August, September, the stock was in a 24% correction, a bear market. It didn't last long. If you blinked, you missed it. But if you're in this name, just be aware of that potential. And it doesn't mean Nvidia is a good or a bad investment. It's just the nature of the stock. Not only does it infuriate people who missed it, it also doesn't make it easy always to stick with it because of that beta. And you've got to accept that if you're going to be part of this trade going into an earnings report.
Man, if you needed another reminder of just how influential Nvidia is and how much it's going to remain so in the great AI build out, you look no further than David Faber's reporting of earlier today, when Musk's XAI is raising as much as $6 billion in new capital, post-money val of 50 plus billion. What are they going to do with the money? Well, they're going to buy more
GPUs.
H100s, 100,000 of them, by the way, for the new data center they have in Memphis.
Okay, let's move on to the chips. You chose Nvidia. It's always hard to tell if people are going to love or hate kind of the leader in any given space. You're liking it today. It is down about 4% this week. It's tripled on the year. It's also down 4% today. Why?
Because there's nothing else out there. You're going to do a DRAM play on Micron. You're going to do a relative valuation play on QCOM. They have the only thing that exists. And so while I hate the concentration, I hate breadth, I'd rather wallow around in small cap value like it's 2002. If you're going to bother in chips, just go for the 800-pound gorilla and go home. It's Friday.
It's been a really interesting, view of how semis have traded versus software, for example. The latter up, the former down. You say that you want to rotate out of semis broadly. Can you be more specific on why you think that and how broad?
Yeah, look, I mean, it's relative performance for us, Scott. That's where we draw the line. And so we've seen most of the trend conditions in an equal weight relative performance on the semiconductor index for the Russell 1000, really with the exception of, say, Texas Instruments, Broadcom, and Nvidia. There's a lot of bad charts there. And that's everything from Qualcomm to Microchip to to Micron, for that matter. So Nvidia is kind of the exception to the rule, and that always makes us nervous when one stock is swimming against the tide of the entire group. Forget the market, but when it's swimming against the tide of its own group, that's usually something that we try to avoid in mass. So we're a little bit more cautious on Nvidia probably than you might otherwise expect given the chart.
I mean, is one tide, though, if Nvidia delivers a blowout quarter, is that enough in and of itself to raise all the other boats?
It might be, but your previous guest hit something. Professor Siegel hit something really important, right? It's priced for upside, and so there are high expectations, and that's usually a point, particularly when you have deterioration in the group, that you want to be careful. I'm not overly bearish on Nvidia. I just think it probably trades closer to 120 before we're all said and done.
From election day through today, Nvidia is up 8%. The SMH is up only 2%, which sounds not so bad, only up 2%. But when you look at the fireworks that we've seen elsewhere, it's a big laggard group. Now you have an index that is 2% below its 50-day, only 2% above its 200-day. And within the SMH, when you look at the names, Judge, the median RSI for the group is 39. Nvidia is 54. The S&P is about 52. So the stocks are ice cold. Only 28% of SMH names are above their 50-day, and the rest are in like little mini bear markets. So that definitely makes an impact on psychology, people being a little bit choosier when they go into tech. And I think trying to be positioned in areas where tariffs aren't so much of a big threat, international trade in general is not so much of an issue. And that, I think, explains why we are where we are. Mm-hmm. And it's where people are putting money to work currently, anywhere but semis.
And the performance of the hyperscalers are uneven, or is uneven, excuse me. They're obviously spending a lot of money with Nvidia. Shares are up 16% in the past 3 months. Amy, you own Nvidia.
I do.
Tell me your thoughts on this.
We've owned it forever, and I keep trimming it, and it's still the largest position in my portfolio. It just keeps working and keeps working. I'll probably trim it again. We have a big issue with gains in the stock. Our clients are very tax sensitive, and so that becomes a big issue. But look, I think this continues to work until they sort of eat through more and more of this backlog. I think that's at some point in 2025. Not exactly sure when it is. We'll talk a little bit about this new raise by Musk's AI company. But
Yeah. Well, this is your largest position now.
It's my largest
Is
position
NVIDIA.
just because of movement, because it keeps working so well. But I've trimmed it multiple times this year.
Josh,
So-
how are you thinking about NVIDIA going into the report next, I think it's Wednesday?
In conclusion, Jim Cramer highlights Nvidia's critical role in the AI revolution, driven by strong demand for its H100 GPUs and rapid data center growth, despite concerns about smaller revenue beats and sector challenges. While Nvidia outperforms its semiconductor peers, Cramer cautions about its high valuation and history of sharp corrections, urging careful investment decisions. As investors navigate Nvidia's sustained success and broader sector struggles, questions remain about its ability to uplift the industry or continue excelling on its own. With mixed strategies among investors, the focus remains on Nvidia's next steps in maintaining its leadership in AI. Can Nvidia's dominance in AI offset the broader semiconductor sector's struggles? How do you balance Nvidia's potential with its history of volatility and high valuation? You're compared to larger companies?